stablecoins are the third $1 trillion market after Bitcoin and ETH. And we're seeing this happen in front of our eyes. Yeah, the blockchain tech can add a lot of utility and a lot of liquidity to these, what would traditionally be considered liquid assets as well. So you'll start to see blockchain swallowing all the real world assets like we talked about back in 2017.
Hello, everyone, and welcome to episode 71 of Colors of Web3 and Entrepreneurship. My name is Lum, your Web3 host. For those of you who are new to the show, Colors of Web3 and Entrepreneurship is a show highlighting the journeys of builders and innovators in Web3 and entrepreneurship. Some topics, especially in Web3, may get technical, but we do our best to keep it accessible for most people. Today, I'm joined by Kevin Rusher. He's the co-founder and CEO of RAAC. Kevin, do you give a quick intro by yourself?
Hey, Lam. Thanks. Super excited to be here. And for myself, I'm Kevin. I'm the founder and CEO of Regnum Aurum Acquisition Corp, or RAAC. And a little bit about myself is I come from an accounting and finance background. And I had written a third-year FinTech paper about Bitcoin. And kind of the topics first on the list was AI. And it said that AI would replace a lot of corporate audits in the 20s. And I was like, ooh, that's not a great value proposition. So I got super far down the list to B, which was Bitcoin. I wrote about it, got obsessed, and thought I was going to be a crypto accountant. DeFi summer happened, 2020. Kind of dropped the accountant part and just kept on with the crypto, and was a power user within DeFi. Found my home within the Curve ecosystem and stablecoins, and that kind of leads us to RAAC.
Cool. Yeah. Well, sounds like you've been playing Web3 for quite some time now. I think many people will be curious about what you did before, your current project, right? Could you walk us through, maybe pick a time when, maybe after college or during college or whenever, and walk us forward up to this present day? I think you said you're doing accounting and finance in the past.
Yeah, for sure. So as I mentioned, it all kind of started when I was still in university and going through everything. So I did start in kind of the accounting world for a bit, but at the same time, I was like moonlighting for an exchange, doing KYC and AML checks on users. And also during this period, I kind of really found my way deeply into the space by helping a friend build a medium scale GPU mining facility. So those were kind of the big precursors. And then kind of leading into DeFi summer, I kind of started a index for friends and family to invest into crypto and manage that for them.
Yeah, so it sounds like you've done quite a lot of different things. Yeah, I think you mentioned you did build a mining facility.
Yeah.
Can you talk a bit more about that?
Yeah, so was a GPU mining facility, was one of the largest Ravencoin miners in the world at the time. I believe this was 2018 or 2019. So helped manage that for a number of years. Kind of was there all the time. It was basically like my office and kind of where I really developed all my skills. The person I built it with started in crypto in 2011. And he started mining BTC in his dorm. So he was a wealth of knowledge for me. That is the primary place where all this took off.
I see. So was this like a proof of work mining or proof of
correct. Proof of work, primarily focused on ETH was our bread and butter. Things winded down over the years. We kept it going a little bit after ETH switched from proof of work to proof of stake. But kind of left that behind and both moved on to different things now.
Interesting. So I'm curious, like, how did you even begin about the mining? You heard from some friend, right? You said, and then afterward you bought some machine and then let it run, or how does it work?
Yeah, no. So basically, he was the reason I got into working at the exchange, and I got into. He's older, so I kind of got into. This was right after I kind of did that paper on Bitcoin, and this must have been October to around December 2017, when the first like really boom happened, and basically I would just harass him every single day, and got no response, and then basically, I think it was January 8th, the PTSD still lives on in me. That crypto crashed very quickly after. And I was kind of just too dumb to quit. And I think he took it as like, oh, this guy's serious. So he was like, hey, I'm building a mining facility for a client. You seem pretty interested. Why don't you come help me out with it? And that was it. Say no more. I was basically there every single day for 3 years.
Interesting. I don't think I've had any like people who actually deal a lot with mining. I actually had some people who did mining, but I think not like a mining facility though. So what does it mean like involved in work? Do you have to check on the operation of some of the machine and maybe upgrade the software or
Yeah, pretty
check
much.
balance?
The most like kind of labor intensive is obviously getting it going, getting all the networking set up, especially at the scale that we were doing it. But once it gets going, it's basically maintenance, monitoring, updating software, like you had mentioned. Not much really goes wrong once things are going. So it became much more a hub for doing other things, such as starting the friends and family kind of index that we ended up doing after that.
Nice. Yeah, makes sense. So was this only for like mining Ethereum?
Yeah, I mean, like there's lots of ways to do mining, right? At the time, obviously mining Ethereum was obviously I don't want to say the easiest, but the most straightforward and profitable thing to do. But you could always mine other tokens and swap into ETH. So you can kind of look at the rewards, see what different tokens are paying for mining, select the most profitable one, and then dump that token into your desired end token essentially, whether that's dollars or
I see. Yeah. Sounds like very interesting thing. And then how many machine did you guys like manage at one point?
I want to say there was probably over 3,000, three to 4,000
Wow.
GPUs in that facility. Yeah, it was a whole
Okay.
whole warehouse
That's
uh
pretty big.
that was yeah leased out and everything. We ended up building it not for ourselves but for a client and managed it. So he's quite a wealthy dude, and it was a little side project for him.
Interesting. So basically, some wealthy client like had this huge warehouse space and had the money, right? So he bought, I don't know how big is like one GPU. Is it like the size of a desk or something, or maybe smaller?
Yeah, no.
Uh,
Like the GPUs were like the ones in like your computers that like
okay.
PC. Obviously, these were a little bit more tailored to mining,
Okay.
but we put 8 GPUs basically per mining rig.
I see.
So it was motherboard 8 GPUs essentially, and it would just basically hash away and calculate transactions.
Quite cool. But I think these GPUs they don't have like a graphical user interface, right? So
No, they do because that's
oh,
that's
they do.
basically what caused the spike in all the gaming equipment and why PC gamers hated crypto and crypto
Hmm.
mining or general anyone who needed a GPU hated crypto mining for a long time, right? And that was the reason is you could use those.
Oh, yeah. I remember now. Yeah, that was like probably like an unintended use case for GPU.
Yeah,
Before it was
exactly.
mainly for gamers. Yeah.
And now you have AI obviously using a lot of GPU power, and these things make a lot more sense now.
Yeah.
Yeah, originally it was crypto mining jacking up the prices of GPUs.
Okay, I see. So the size of GPU is pretty small, but I imagine that like 3,000, it's close to like 40, is it? No, like 400? How many mining rigs is it?
Yeah, it was around 400,
400.
500, something like that.
Yeah.
Yeah. So it was in the difference between kind of like this is now going into mining, but like ASIC mining and GPU mining is Bitcoin miners are ASICs,
Hmm.
application specific integrated circuits. So they're only designed to do one thing and one thing only. So when you buy like an ASIC miner, you're kind of set with it. So when you look at like Bitcoin mining, you have to constantly replace all these machines. They'll come out with new products that are more powerful, and you can't really upgrade them. The cool thing about GPU mining is you just swap out the GPUs when stronger, more robust ones kind of come out. So that's what you're able to do and keep up with the trends and things like that.
Makes sense. So basically, it's like, yeah, you sell the old one, get in a new one, replace it, and then just keep running.
Correct. Yes. Which is where with Bitcoin miners, you would have to sell the whole unit and purchase a whole brand new unit.
Yeah. Okay. And then, so basically for this, I guess, the cost is like the cost to acquire the GPU, right? And then also the electricity cost. And then I'm sure there's probably a break-even equation somewhere.
Yeah, exactly. So there's kind of like two big things. I would say three when it comes to mining, right? You have the cost of your space, or four. Cost of your space. You have the cost of your equipment, the cost of your electricity, and the cost of what you're mining. So the biggest factor, or the kind of generally the biggest determiner of profitability, is the cost of your electricity. And that's kind of why you'll see people focusing on renewable resources or oil burning like gas and things like that to mine and using byproducts to power these things. It's because if you can push your cost to mine down, then your profit is basically the price of Bitcoin minus that. So if you're using renewable, then you can really shrink that essentially.
Interesting. Yeah. So I know that for POW, for Bitcoin, it's like you have to solve an equation, right? But then the equation just keep getting harder and harder over time, which means that you need to pump up the hash rate and then
Yes,
keep
yes,
running it. Yeah.
exactly. So when my friend had started Bitcoin mining in 2011, he was doing it in his dorm, and I want to say he was mining like a Bitcoin every 2 weeks or something. So which is, you could never do that now, right? There's just no chance because there's so much competition.
Yeah.
Because essentially what these GPUs are doing, or these ASICs are doing, is just running mathematical equations multiple times per second over and over again. So you have to like look at it. Someone who's mining in 2011 on an old computer who was getting 1 BTC. It's like comparing like 1 horsepower to like 10,000 horsepower that exists in these warehouses now. So
Yeah.
that's kind of how you have to look at the competition and the global hash rate.
Cool. Fascinating. So then it was, well, it run quite well, right? And then at some point, I think that, so what happened in the end? Did the guy like liquidate everything, or is he still mining?
Yeah. He's still mining. They kind of stepped away from operations, so I'm not sure what they're mining to date. I know he put other businesses in there of his as well. So he could have at this point shut down the machines and just be using it for his other businesses.
I see.
Yeah. So that was a chapter I closed quite a while ago. And it was kind of my um I would say what provided the foundation for myself and kind of where we are today.
Cool. Makes sense. And then you said afterward you went in DeFi summer, you were building index, you said, for like
Yeah,
friends
I
and
just
family?
manage
Yeah.
kind of like friends and families capital within. At first, it was just purely crypto, and it was kind of before DeFi summer. And then DeFi summer happened. You had the Cambrian explosion of all the protocols. You had our food protocols back in the day.
Yeah.
So hopped on the train and was like, if I can turn these kind of static assets productive, why wouldn't I do that? And kind of jumped into it. And that's where, truthfully, that's for myself, where I knew this was the space for me and where I wanted to be. I think the space iterates so fast, which is amazing. You walk away for 2 weeks and it's not the same space you left. So that's kind of where I kind of really developed a lot of my skills and understanding of DeFi just by doing and being a power user.
Yeah, for sure. I think Web3 is moving very fast, and like have new teams, new topic, new technologies come up almost on a weekly basis, right? So definitely have to be on top.
Yeah, it's really amazing. I mean, lots of people tend to kind of chat with me, and once they kind of realize what I do, they're some depending on who they are, their minds are blown. And I'm like, yeah, there's a whole financial system that exists under your nose, and you have no idea. And then they start asking about other things, and I'm like, whoa, like the space has grown so much and it's so expansive that I like to think that like even DeFi and crypto is somewhat of a niche. And then you drill down further into like stable coins, and that's a niche in itself. So I operate within a niche. So that's just like how much the space has grown. It's truly amazing. I mean, you can obviously tell I'm a big crypto nerd.
Yeah, for sure. I think, well, crypto has evolved a lot, right? Since even like 2017. Yeah. I think back then, like RWA wasn't even the term. I think probably called something else. And now it's like, yeah, more people know about it. I guess because thanks to like a lot of the mainstream big investors and big even like financial institution and Web2 companies also like going into the space as well. Yeah, so that's
Yeah,
helping.
no, 100%. And that's what we've really seen is we've seen an emerging market become an asset class, right? The kind of the wish that we had back in 2017 is it was always, oh man, like if the banks just deposit 1% or these institutions deposit 1% of their assets, this is what would happen. And I feel like we kind of are in that transitionary phase right now with kind of the institutional adoption and things like that. And it's also interesting to see because even at that time, it was talking about Ethereum and kind of the programmability that crypto and DeFi offers. And it would start housing real world assets, titles, things like that. And here we are seeing it happen right before our eyes. So yeah, it's incredible to see how much it's grown.
Yeah, for sure. Yeah, can wait to hear more later on. Yeah. So before we deep dive into your current company, share with us like what do you do for fun, your free time, your hobbies?
Yeah, I mean, I feel like I like to think I'm a pretty simple guy. Outside of working all the time, I generally just like to take my dogs on walks, hang out with friends, family. I'm big into combat sports. Yeah, any type, whether it's like collegiate wrestling, MMA, boxing, judo, you name it. I'm there for it. So yeah, that's generally how I like to spend my time outside of RAAC and crypto.
Nice. Oh, sounds like you learn a lot of martial arts. Like, did you compete in any competition?
No, just training for fun here and there. Much more a spectator than an active participant, for sure.
Nice. Yeah. But yeah, I think it's still pretty cool though. Yeah, trying to learn multiple different mixed martial arts. I think take years, right? If you want to master one, if you want to get to like black belt level in
Oh
one
yeah, I
martial
think
arts, yeah.
I also I think it's very much a lifetime thing. It's something you can continuously improve on, and I think like yeah, it's like one of those things you'll never attain a perfection and always be able to improve. I think that's probably one of the things I love about it.
Yeah, I think that's also a good mindset to have as well, too. Especially when trying to run a company, right? Trying to continuously hone your product and yeah, make it better. Yeah, cool. So, yeah, well, without further ado, let's go ahead and deep dive into your current company, RAAC. Feel free to share any website, presentation, video about
Yeah,
your company
sure.
that you have.
I'll
Yeah.
got our website here for you. So what RAAC is, or Regnum Acquisition Corp, is what we're looking to do is provide the most seamless bridge between TradFi and DeFi. And kind of what we mean by that is we find in I find, I shouldn't speak for anyone else, I find in my very humble opinion that everyone is building in the space for what they wish the market was and not what it is. And what I mean by that is anyone doing RWAs within DeFi now is either focused on T bills or if they're doing other RWAs, their protocols are kind of so walled off from the average DeFi user that it becomes a much harder sell to bring in active users. So what we've really done and taken our time to do is build a product that integrates into the existing systems that we currently use. And what we mean by that is being able to plug into a protocols permissionlessly like Aave, Curve Finance, Frax Finance, FX protocol, you name it. So that's kind of RAAC's goal and what we look to do. So we're kind of built on four main pillars, which is lending, borrowing, collateral, liquidity, and rewards. So both within DeFi and TradFi, lending and borrowing is such a common activity. It's kind of the basis of everything within a lot of DeFi products. So it's a really strong use case on both TradFi and DeFi, but the problem within DeFi is the collateral. And what I mean by that is the volatility that we experience on a daily basis. I'm sure there's people in the audience today that have exposure and know what it feels like to be on the roller coaster that is DeFi and crypto, right? I mean, how many times do we go through and see, oh, this liquidation cascade wiped out this many billions of dollars? So what we look to do is provide crypto with stable collateral that can be used within DeFi. And what this does is offers new ways of accessing liquidity for both TradFi and DeFi users. Because I mean, I don't know if anyone else listening today is like this, but I don't leave my house without a laptop, right? Because I have
Hmm,
active loans. I'm always managing my loans, right? Maybe it's
I
my
see.
DGen nature to always push the limits. But there really doesn't exist many assets within DeFi that you or protocols that you can walk away from for 1 to 2 years and not have to check price or not have to check anything. So really what we're looking to bring is stable collateral that DeFi users can harness, because that's a massive use case that we need, right? We're getting liquidated all the time. So this is kind of the four pillars that we're built on, and obviously the last one is rewards. So we've really taken a different approach. What we find is everyone that's kind of doing RWAs within DeFi right now is very much TradFi, where or traditional finance, whereas this is a DeFi product built by DeFi natives for DeFi natives, but harnesses traditional finance, if that makes sense. So
Hmm.
definitely taking a different approach to to RWAs and how to integrate them within DeFi. And the first collateral that we are aiming to bring is not aiming to bring, are going to be bringing is real estate. And that's in the form of one-to-one backed real estate NFTs that are actually redeemable for the underlying title. So what we allow users to do is purchase this NFT, take a loan against it at our interest rate pegged, a soft peg to half of the US prime rate. So if US prime rate is 8, RAAC charges 4. And what we allow you to do is utilize that loan in any way you see fit. But we also have what are essentially pre-selected DeFi strategies, because we understand not everyone is a DeFi wizard. So you can basically buy a real estate backed NFT, take a loan at a really low and predictable borrowing rate, and earn yield on it. It's basically a carry trade.
Interesting. So basically, it'll be like the real estate. So it'll be the main asset, right? Being
Yeah,
collateralized.
to start. And this is where other asset classes actually come in. So as we mentioned, liquidity is such a huge thing. DeFi needs liquidity, TradFi needs liquidity, but there's nothing that seamlessly integrates like we do. And due to that reason, we've actually been able to have 3 billion in assets committed, and majority of that is actually in the form of gold. So we're looking at incorporating all types of kind of traditionally stable assets and commodities.
Interesting.
The
So when you say like 3 billion institutional asset committed, these are like they have agreed for the assets to be used as like collateral. Is that correct?
Yes, correct. So 3 billion in real world assets are essentially going to be, are not, sorry, 3 billion assets are committed to RAAC as of now. And the way that works is one product that we are bringing out is stablecoins that are backed by these real world assets. So what we're doing is taking in-ground gold that's in a mine. So there's 1 million ounces. And what happens is it gets valued at 80% discount to spot value because it's in the ground. So that 3 billion would be roughly 600 million at current valuation. And what we're doing is minting a stable coin backed by it and deploying it to DeFi. And what this does is it allows a traditionally illiquid, non-productive asset to be revenue producing pre-production. And as they start extracting and refining the gold, they are going to continuously mint more stable coins as the collateral backing is increasing. So this provides DeFi with more liquidity. There's new revenues or no, new avenues to generate revenue within the space. So it knocks out multiple things. It provides, DeFi new liquidity, but it also gives mines basically financing if they want. And this is a real use case because globally, precious metal mining has dried up in favor of rare earth metal mining. So this is a strong use case for both DeFi and TradFi.
Oh, that's quite an interesting point that you raised over there. So you said 3 billion committed, then I think you said like it's 80% discount or something like that, right? So I
Correct.
mean like it has like what is it, 3 billion minus like 2.4, yeah, so 600 million, right? The
Yes.
current valuation. So does that mean
Correct.
like you can mean 600 million of stablecoin backed by that?
Not exactly 600 million. So what you need to do is when you back these kind of synthetic dollars by these assets is you need to have a buffer.
Yeah.
If you minted 1-to-1 exactly and the price of gold drops, then the dollar backing or the value backing each synthetic dollar would decrease. So you need to have buffers and manage those systems. So not exactly
Oh,
600, but you can get very efficient, maybe 95, 97%.
makes sense. Yeah. So it's kind of somewhat similar to like the fractional reserve ratio, like banking in a way.
Yeah, exact. Kind of opposite though. You're over collateralized in this scenario. There's nothing that operates within. Not I don't want to say nothing, but majority of DeFi products run on over collateralization.
Cool. So you basically can get like up to 80, 90%. But I guess it's dependent on the gold price, right?
Yeah,
Yeah.
dependent on gold price. So when you look at different asset classes and things like that, you have to look at the underlying liquidity, how big the markets are, what is the stability of those prices and things like that. So there's no like cookie cutter way to say this applies across all RWAs. Even within RWAs, you have gold that's in different product like life stages of the production cycle, different values, things like that. So all those parameters need to be accounted for and kind of reflected in the amount of synthetic dollars you can mint. So keeping a healthy buffer.
Okay. So as you said, like as you go move through the production stages or phases, right? I guess from like I guess it's like pre-mining or something. I'm not even sure of the process, but like after the what is it called? Processing stage of the gold, then it'll be more value, right?
Yeah, once they start extracting it, correct. And kind of the way that works is they'll initially be going through a Big Four audit to obviously verify the asset, but there will also be quarterly audits done on the mining production. And we're partnered with a protocol called Instruxy, which actually focuses on the actual tokenization. And their tech is really unique because what it allows us to do is verify where the gold is in its production cycle and reflect that on chain.
Nice. Yeah. So I
Yeah.
think you would answer my next question, which is like I think in Web3 you need like some sort of an oracle, right, to bring
Yeah.
the
Yeah.
item on chain.
Exactly. You got it. We're are you're familiar with Chainlink, right?
Yeah.
Yeah. So exactly. So we're a Chainlink build protocol. We're part of Chainlink's accelerator. So is Instruxy. So we're utilizing Chainlink's proof of reserves. So you have a third party attestation, like you had mentioned, which goes audits, verifies, and basically that's what gets brought on chain. So exactly through oracles.
Nice. Okay. Oh, interesting. I didn't know you guys part of like Chainlink accelerator. So you was building. Yeah. Could you quickly talk about that? I'm actually
Yeah.
curious. Like what go under the accelerator or go inside the accelerator? Yeah.
Yeah. So Chainlink accelerator basically takes protocols or kind of Web3 projects that are on the forefront of innovation, and it's a pretty rigorous process to kind of get accepted. But if you're a protocol that is a strong use case with Chainlink, and you kind of show them that you're a serious contender, you get accepted into the accelerator, and they've been instrumental in getting RAAC to where it is. They kind of help you with everything and been guiding us a lot through kind of conception of the idea all the way to launch. So it's nice to have the support and backing of an industry titan for sure.
Yeah, for sure. Okay. Can you explain also? Okay, I see three numbers on the screen, right? 3 billion. I think we already talked about that. And then what's the 235 million deposit CQ?
Yeah, so that's part of the 3 billion. What happens is the stable coin that gets minted, we would be intaking $235 million of that directly into RAAC protocol, and we would deploy the rest to other DeFi protocols. So RAAC will be helping manage the stablecoin kind of deposits and where to place all that to create the most optimal system.
Okay.
So we're expecting to basically intake 240 million of TVL directly into our protocol. And even outside of that, as we talked about, they will be minting stable coins as they extract and refine that gold. So 60% of whatever gets minted in the future will also be deposited to RAAC.
I see. And then once it's deposited into RAAC, then I guess user can come in and
Yep, exactly. So this is kind of leads right back into the 4 pillars, and this feeds our lending pools. This feeds those one-click deposit strategies that I had mentioned that are Curve stablecoin LPs because they need to create liquidity. And it also goes into our other product called Xenobonds, which are basically the way that we intake capital from DeFi and deploy it to real world projects, which essentially kind of creates a flywheel because the capital goes from stablecoins being minted into Xenobonds, which goes into real world assets, which gets brought onto the RAAC platform.
I see. Yeah. And then the other 350 million real estate letter of interest, is it?
Yep. So we garner a lot of interest on the real estate side of things. This is for kind of the lending and borrowing, which we'll also show you here shortly, based on a demo video, so user audience can kind of get an idea of what this would look like. So yeah, we've gotten strong institutional demand across 2 asset classes, which is precious metals and real estate. So basically, the stablecoin minting is going to help fuel those 350 million of real estate LOIs.
Okay, cool, makes sense. Yeah.
And yeah, as we talked about, like who's it for? I mean, I think we've already covered the institutions are definitely interested. When you provide new liquidity sources and LPs, that attracts DeFi natives, and we're also expecting new products and protocols to kind of spin off of this. So we're really hoping people like what we're putting out, and we feel like there's strong use cases for kind of other features that could come out, but could be entirely independent protocols themselves. And that's kind of the whole beauty of DeFi and crypto is the Lego money and the composability aspect of it, and kind of programmable money, if you will. So really looking forward to kind of seeing what people integrate and attach to RAAC itself.
Okay, cool. Yeah. So would you say for these three, who are like the biggest or who's the most important in the initial phase?
Yeah, I think definitely in the initial phase, it's definitely the institutional demand that's driving a lot of our TVL. And I think it takes within DeFi, it takes a lot of trust to kind of to run a RWA protocol. When you work in a totally on-chain environment, you can kind of verify and see everything that's going on. Whereas with RWAs, you do need to have some sort of trust in the custodianship and how those things are being run. That's why we use Chainlink oracles and things like that. So I would say they kind of feed into each other. The institutional demand is kind of the driver. And I think once that comes on, then you kind of have the DeFi natives joining as well. There's a lot of like trust gaps I feel like we cross being a Chainlink build protocol, the founder of Curve Finance, Michael Ergarov, is an advisor for RAAC. We're also incubated by the Llamas, which are a curve-oriented builder community, and they're composed of a lot of other protocols like IPOR. The Convex guys are Llamas, Curve as well, Reserve Protocol. So definitely taking the time to entrench ourselves and really kind of build from DeFi outwards. And it was a little bit of a surprise to me because it was always, you know what, run everything with DeFi natives, prove the system, and then go to institutions. But it's actually worked backwards. The institutions were saying yes much before the DeFi natives were in the scenario. So yeah, I would say the institutions are the first kind of driver, and that kind of leads into the DeFi natives.
Okay, yeah, makes sense. And then when you said earlier about like stablecoin minting, does that mean you guys gonna issue a new stablecoin, right? Based on
Yeah,
the back assets?
correct. So RAAC is not doing the minting ourselves. It'll be done through partners. We're more facilitators of this and this ecosystem. But yes, we will be launching stablecoins, and we have interest. So what we call them is silos. So silos are kind of segregated based on real world assets. So the first silo that we already talked about was the precious metal silo, which was the gold. But it can intake silver, palladium, kind of any other metal you want to throw in there. And then you can do a silo based on oil and gas, real estate, data, the list goes on. So our goal is to basically bring all these different types of real world assets on chain and deploy stablecoins and making RAAC the hub of these RWAs and stablecoins as we're built on Curve Finance.
Okay. That's quite ambitious, yeah. Very different
Yeah, and,
assets.
and that's and that's exactly what I was getting at. Is it's a very unique spin on this. Like when you look at the RAAC token and what RAAC token does, I'm not sure if you're familiar with Curve.
Yeah, somewhat familiar. I didn't play that much with it, but yeah.
Okay, but you have an idea, which is great. So the way it works is if our auto compounders are built around Curve LPs, that means they would be receiving Curve and Convex rewards. And what we do is we push our RAAC emissions to our auto compounders. So just like VE tokenomics with Curve, there's votes to decide on how our emissions are allocated to these auto compounders. So you can incentivize liquidity with kind of that gauge. And what we have is a second gauge, which is different from Curve, which is our RWA gauge. So we take the real world asset income that's generated and we deploy it to our own auto compounders in the form of investments. So treasury investments. So what that means is our first gauge acts as an incentivizer of liquidity, similar to Curve token, but our secondary gauge acts as protocol owned liquidity as a service. So if you're a DeFi protocol or you're a DAO or you're a large whale and you want to influence emissions, you can do that through RAAC, and you can deepen your liquidity through incentivization, but also protocol and liquidity or sticky liquidity.
I see. Cool. So basically, you would get a lot of governance token, right? And then which is then be
Yeah,
able to influence. Yeah.
exactly. So if there were, let's say, if there were 100 RAAC tokens to be distributed
Mhm.
in the week, and there were 4 pools, and each let's say the weighting was equal, each pool would receive 25 tokens, right? But now let's say you controlled 50% of the RAAC supply. You could direct 50 tokens to your pool specifically. So which attracts more liquidity, deepens your liquidity, pushes your product further. So RAAC is really harnessing TradFi and DeFi and combining them. The institutions that we have onboarding, I've prepped them very, very well on the Curve and Convex ecosystem, so they know exactly what they're going to be participating in, which is really exciting. So yeah, as I mentioned, our goal is always to create the most seamless and frictionless bridge between TradFi and DeFi. And here we are having both sides, traction on both sides.
Nice. And then, I mean, like you said earlier, I think you'd give financing opportunities and also you bearing, I guess, opportunities for the TradFi, right? To entice,
Yep,
right?
exactly, correct. So they have, well, here's the really cool thing is you can do the financing. You could take a auto compounder position, take a loan against that, and then finance whatever you want. And now you, rather than taking a loan on, let's say, gold, that's a static asset, you've taken a loan on a productive liquidity pool position, which is essentially is paying its own interest. So there's lots of flexibility, and that's what a lot of these institutions are very excited about.
Nice. Yeah, very interesting.
And I actually have here a video that would kind of walk through kind of our core product. As I mentioned, kind of real estate is our core product, and then the stable coins that we're onboarding help feed that core product and grow it. So this is kind of what our testnet looks like and how users can expect to interact with the protocol at the start.
How to use RAAC, a DeFi application hub for real-world assets. Welcome to this step-by-step guide. First, we log in by entering the password. Next, we connect our wallet to access the dashboard. Once connected, the system loads our portfolio and available features. Now let's navigate to the marketplace where we can browse available NFTs. Here, we select an NFT from the marketplace that we'd like to purchase. Click View on the NFT, then Approve. Now, we proceed with the purchase by confirming the transaction in our connected wallet. Once confirmed, the NFT is successfully added to our collection. Here's our newly minted NFT displayed in the marketplace. Next, we deposit our NFT into the lending pool, securing it as collateral. Click Deposit and confirm in your wallet. Let's lend CRV-USD into the lending pool and provide liquidity to the ecosystem. First, we click Lend to begin the process. Next, we enter 1 million CRV-USD as the amount. Select Approve and confirm in your wallet. Then we select Approve to confirm the transaction. Using our NFT as collateral, we borrow 100,000 CRV-USD from the pool. This allows us to access liquidity without selling our asset. We select Borrow, choose the NFT to collateralize, enter 100,000, enable insurance, and approve the transaction. Approve in wallet, and confirm Borrow. Before moving forward, let's explore our updated dashboard and verify the loan details. Withdrawing the CRV-USD you previously lent. On the dashboard, we switch from Borrow to Lend, then select Withdraw to retrieve our CRV-USD. Now we withdraw 200,000 CRV-USD that we previously lent, reclaiming part of our provided liquidity. Approve in wallet. Withdrawal and confirm. Depositing our tokens into the stability pool. To maintain our position, we repay 50,000 CRV-USD of our 100,000 CRV-USD loan. We do this by selecting Borrow, then Repay, entering 50,000 CRV-USD, clicking Approve, and confirming the transaction in our wallet, reducing our outstanding debt. Finally, we deposit our tokens into the stability pool by selecting Stability Pool from the left menu, entering 200,000 R tokens, clicking Approve, and confirming the transaction in our wallet. In return, we receive 200,000 D tokens, which play a role in the system's stability. That's it. You're now set up to lend, borrow, and manage your assets, including NFTs, within RAAC.
So yeah, that was kind of a quick breakdown of kind of our core product, which was the NFTs and taking loans against those. And that NFT is what a user would be able to burn to receive the actual title to the real estate.
I see. So basically, it's like under the form of an NFT, right?
Correct.
So then I saw,
Yeah.
I saw there was like a rent amount in the NFT. Does that mean like they will get income or something?
So the way it works is we have our lending pool, which gave back our tokens. And then you have our stability pool, which is responsible for liquidating any risky positions. So you have our R token and the DE token. that was described in the video. And what we're doing is making a curve finance liquidity pool between these two tokens. And what we'll be doing is sending the rental income there. And that's how users attain. So it's somewhat of a reflexive system. You're kind of meant to play within the game. So if you want to earn your rental income, then you take your loan, you deposit to our Curve LP, which builds up the RAAC ecosystem further and provides more liquidity, essentially. So it's a very streamlined and efficient system. So the way that you gain that is through that LP, but there could be other strategies within DeFi that are paying more. So you may opt out for that. And what that actually does is increases the concentration of rewards for the current depositors. So you theoretically should end up with more rewards than you would traditionally holding that app.
I see. Yeah. So it's like a closed loop ecosystem in a way.
Yeah, almost exactly. Which is really, really great that you caught on there, because the big problem is kind of if you look at liquidity and you look at rewards. So if a protocol is paying out, let's say, rewards to an LP, and the deposits were to double, then the rewards would be cut in half, because the amount of TVL has doubled and the amount of rewards to distribute per dollar have doubled, essentially. So that's a real issue that happens all the time within DeFi. And what we call that is mercenary capital. And what that means is that capital is not a long-term user. It's just there to take the rewards, dump them, and go to the next project. So when you create a liquidity pool between our R token and our DE token, the only way to receive either one of those is by coming to RAAC. So you can't just dilute the system. You have to add to the system on both ends to receive those rewards. So what that does is it makes the system more efficient by stopping mercenary capital. So the only capital that's getting paid within the RAAC ecosystem is productive TVL, essentially, or productive deposits.
Okay. Yeah. Cool. And then for real estate, you're saying that this. I'm kind of curious about so there's a lot of legal ramification, right? So the titles and not even sure how that would even work. Like, does that mean that someone put their house on chain and the title is someone can own it? No.
Yeah. There's multiple ways. There's multiple ways to do it, and there's multiple designs. Like I said, there's ways to. The most, I would say, standard way of tokenizing real estate is not tokenizing the real estate itself, but you would put the real estate in a company and then tokenize the shares of the company or the company itself entirely. And that's what people are buying on chain. Whereas, and what that does is creates very strict regulatory hurdles to overcome. And this is where I say you don't have that composability or that integration with existing systems. Whereas RAAC's focus is on delivering stability. So our real estate would kind of sit in a SPV, special purpose vehicle, which would protect it from RAAC creditors, investors, things like that. And our NFT almost acts like a right to redeem, or an option. It's like almost an option for real estate, but not quite. So that's kind of how we've designed our NFT. And what that allows for is that seamless and frictionless integration into DeFi, unlike other protocols, which have to attract a whole another user base to their app.
Okay, I see. Yeah, so I think that's quite an interesting way. I'm not sure what other companies doing for it, but yeah. So you basically put it into a company, and then so people can actually get a portion, a fraction of the company, right?
Yeah. So you could so that's how a lot of fractionalization products work. So that's why we focus on one-to-one backed NFTs as well. And we actually specifically focus on Section 8 real estate to start. And I'm not sure if you're familiar with Section 8 real estate.
No, that one I don't know. Yeah. What does that mean?
So it's actually low-income housing in the U.S. and it's a government program. So majority of the rent is actually covered by the U.S. government or government programs. And what it allows us to do is these properties tend to be cheaper. So they're from anywhere like 60 to like 200,000, which keeps the barrier to entry relatively low. But what it does is provide sustainable and predictable cash flows that we're able to harness for the system. So that's what we focus on. And the unique thing is what we do to kind of open up the accessibility, and this ties back to the stability pool, is when NFTs are liquidated on our platform, they go into an index contract. And that index contract is almost like a vault, and it basically spits out a token that represents all the assets deposited to it. So it's like an index, yeah, that has a NAV to it. So that will also be a collateralizable asset on the RAAC platform that opens it up. So it's not fractionalization per se, but it allows the tokenization of a NAV, if that makes sense. So the tokenization of multiple assets rather than just one specifically, which is almost smooths out a lot of risk for users as well, but it allows smaller players to basically not buy an NFT one-to-one, as it'll be a collateralizable asset on the platform as well.
Okay. I see. So then, for a lot of the, I guess like TradFi institution, right, or businesses, they be more like risk averse. So what I mean, I know in any Web3 system, like, there's will always be any potential risk. Like, how do you what are the current like risks with the with this model, and then how do you plan to overcome it?
Yeah, so for kind of compliance and stuff, we are KYCing on mints for NFTs. This is to comply with our RAAC, which is non-US users, and basically OFAC sanctioned users. But in terms of that, RAAC will be implementing geoblocks and things like that to remain as compliant as possible. But when it comes to the underlying risk of smart contracts, because we are deploying on Ethereum mainnet, I guess the biggest risk is obviously smart contract risk. We do our best to mitigate that. We've already undergone multiple audits, and we have one planned, and we'll be doing a few more after that. So yeah, the institutions are kind of well aware of the risk, and the kind of difference is you have a bit more control when it comes to RWAs and things like that. So we don't expect anyone to steal a bunch of houses from us and redeem them or anything like that, or steal institutions' assets. So that so much isn't a risk as opposed to kind of the risk on the lending pool and stability pool and things like that. So we do our best. We've taken the time. We've been building for 2 years. We have undergone multiple audits as of now, and plan to do our best to reduce any risks that could be present.
Cool. Yeah, makes sense. I know with smart contract, there's always like potential risk, right? I think our industry in general face a lot of like hacks and theft and multiple different crazy scenario that happen.
Yeah, no, exactly, and it's depending on kind of, I guess, where the ethos lies, and you have chains where you can roll back transactions and things like that, but we have like withdrawal queues and emergency possibility on the contract. So potentially, if something were to happen, it's not like someone can withdraw right away. There's a time barrier for us to act as well, and we'll be introducing obviously risk monitoring, live dashboards, and things like that for prevention and mitigation.
Cool. Yeah, I think that'd be pretty helpful. Have some sort of monitoring on that as well. Cool. So then, you said you deployed this on like Ethereum mainnet, but who do you consider like to be your main competitors in the RWA space, or project that building similar things? Yeah.
So this is where there's tons of RWA protocols out there, but I would like, from what I've seen and what I know, I would think we are the only ones that are doing RWAs kind of this kind of DeFi oriented in terms of the kind of gamification, how our token plays into all of this and how we sit on top of existing DeFi protocols. But to throw out some names, obviously, Mantra's a big one. Realty is another one. They have like 113 million in TVL. So there's competitors out there that have done outstandingly well. And Realty is similar. They focus on Section 8. But as I mentioned, they're walled off from the rest of DeFi. They actually use an Aave instance to do their lending and borrowing. But yeah, no composability or accessibility to kind of the existing systems where majority of DeFi users lie. BlackRock's Biddle is another one. Securitize. There's like Republic, who's I believe doing tokenization. There's tons of people out there doing it, but I genuinely don't feel there's anyone doing it in this manner. I still feel like the kind of general outlook on this is very much TradFi coming into DeFi, whereas I like to think we're DeFi going out to TradFi.
Cool. Yeah, makes sense. Thanks for sharing that. Yeah, I think that I guess feel like one thing I realized that I feel that each of the RWA protocol they have their own like unique approach, right? There's no like one size fit all on how you approach it, but of course like all in the same RWA space.
Yeah, exactly. There's some things that are like some designs that are somewhat standard, but I think like you just mentioned, like even that, like that's like what to me DeFi is. All the basic mechanics, once you understand them, like you kind of know how a lot of protocols will operate, and then everyone adds their little flair or twist onto design. So exactly like you said, there is no one design fits all, and there isn't going to be one protocol that takes all either, right? I think a lot of people have already found their niche. Like Realty focuses on real estate specifically, and yeah. So there's a lot of wonderful projects out there, a lot of great builders. So it's really exciting to see.
Yeah. And then what do you consider to be your business model for your company? How do you plan to generate revenues?
Yeah, so part of the way it works is like we mentioned, RAAC is deploying the real world asset income as treasury investments into our own auto compounders. So what that means is RAAC is basically taking a large portion of all the income generated by these real world assets and investing it as a treasury. So month on month, we're generating revenue. We make mint fees off of the stablecoin minting based on the total amount of precious metals that are looking to be brought on right now. If we were to close on all of it, it would be around 21 million in minting fees alone. So yeah, we basically make money on minting fees, the real world asset income. 10% of the assets that are in silos will be deposited to RAAC. So the RAAC treasury is intaking real world assets all the time. The lending and borrowing, and then we charge a fee on those auto compounders that we had mentioned.
Nice, I see. So you have multiple sources of income and revenues, right, coming up.
Correct.
Yeah,
On top.
yeah.
So, and then that doesn't even include the kind of real world financing that we would do to miners or through the Xenobonds and things like that. On top of treasury assets producing income as well.
Yeah.
So it's very, very much looking to produce a token with a lot of utility and revenue streams, and we actually distribute 80% of our revenue back to token holders.
Okay, makes sense. Yeah, want to reward the people who support you, right? Yeah. So I mean, with like multiple different revenue stream, different project and silos going on. I'm curious, like how many people actually work in your company?
Yeah, it's our goal. Sorry, our goal is to remain as lean as possible. There's 6 of us full time right now, so really looking to be like Tether in this scenario and really harness the efficiency of blockchain to kind of make this happen. I mean, that's the whole beauty, and I think that's why there's a lot of interest from institutions is the efficiencies that blockchain and smart contracts offer.
Yeah, makes sense. Yeah, I think Tether is like, well, I mean the industry giant. I don't know how many people in the team, but I think it's pretty small for what the amount of revenues that they generating on a quarterly or even
Yeah,
yearly
yeah.
basis, right? They're
I
sitting on
think
like a huge pile of cash.
I think they went from like 80 employees to maybe just over 100.
Yeah,
And they're basically in revenue generation. Last time I checked, we're outperforming Coca-Cola.
yeah,
And you just think of how big of a company Coca-Cola is, and globally how many divisions they have, and they're
yeah.
being outperformed by 113 people.
Yeah, it's quite crazy. I think, I guess they also benefit a lot from being the first in the industry. I'm not sure if they're like being a stable coin, and also I believe most of the income come from the treasury yield, right? That they
Yeah. And
yeah
and they did a great job being a first mover and kind of reaching a terminal velocity. But that doesn't um, that kind of doesn't remove like how efficient the tech is, right? And
yeah
and I think that's kind of the way we remain so efficient is, I mean, if RAAC were a traditional Web2 company who didn't have partners and was looking to kind of do this the from the top down, we would have a lot more people and need a lot more bodies. But the beauty is programmable money and Lego money and being able to slot into other protocols to kind of make these things happen. So looking to remain lean and mean for the foreseeable future.
yeah. I think that's a powerful thing if you can remain like that, yeah, for the foreseeable future. And so, with 6 people running the project, and what do you consider the challenge facing the team?
Yeah, I mean, what keeps me running the project? I think a big thing for me is, as I mentioned, I'm just a big DeFi nerd. I love this space more than anything, and I feel like it's given me so much and taught me so much and brought a lot of great people into my life. It would be amazing to deliver as much value as it's given me, and I think unfortunately it's been open season on meme coins and rugging and scamming. Yeah, I mean, my goal is to put a product out there that helps a cultural shift in the space and kind of shifts retail's view from kind of a casino to appreciating the more sophisticated financial products in the space.
Yeah. Oh, go on now.
Yeah, and I would say like the biggest the biggest challenges kind of facing the team are how to articulate the complexity and sophistication of the system we've built. There's a lot of levers and avenues, and depending on who you're talking to, whether you're talking to a TradFi person, a DeFi, a miner, there's a lot of different points you can present in a lot of different avenues. So yeah, articulating on all these different value propositions in a coherent manner, I would say, is probably the biggest struggle.
Yeah, totally. I think, well, let's just maybe go through one of your challenge at a point. I think the first one you said is like the reputation issue, right? I think our industry, that's actually an industry-wide problem that I see with Web3. We still have a huge reputational problem from rugging, scammings, and yeah, just bad people, right? Trying to extract more value from the space and rather than giving in, which which I think is really kind of like a negative externality in the economics term, right? For the serious builder like your team and other teams as well, which is an unfortunate, yeah.
Yeah, no, very, very, very much so. And I think this is where it's such a duality, when you look at the excitement of the professional side of the space, and there's a lot of buzz and a lot of people are pumped, and then you look at the retail side of the space and the people are down in the dumps. And I think that duality right there is due to, like you said, the reputational and all the scams that have been going on.
Yeah, and I don't know what sort of solution one person or one project can do. It's like an industry-wide effort as well. So I think it have to be slowly.
Exactly. It's an industry-wide thing, and I think everyone needs to play their part in this. And there's tons of builders and protocols doing it, but it's it's easy. Was it like, I don't know what the exact saying is, but a reputation can be worked for years and ruined in a moment, right?
Yes.
What's going on. So I'm hoping the institutional adoption and the sophisticated financial products can start to be put in the spotlight.
Yeah, for sure. But I feel like the crypto Twitter and also the media, media tends to have a bias towards negative sentiment. It's just because of how it works, actually, psychology. It's like psychology. Most people may not know that, but like, yeah, people they get a bit excited about good news, but like they're actually so much more drawn to like drama and hacks and crazy things that happen, right? Because it's just like it's big and it's quite rare, right? In humans' mind.
No, 100%, and it's much easier to highlight the one really big negative thing than all the 100 positive things that happened in a day. But no, I think it seems like as of now, I mean, I'm not sure if it's because everyone capitulated or they're smarter now, but it seems like the meme coin kind of phase is starting to die down. Obviously, there's a place for meme coins and like actual meme coins, but I mean, in terms of the amount of scams and rugs people are knowingly investing in, right? So that's something that's nice to see, and I think will slowly start to fade.
Yeah, hopefully it will slowly fade away, a lot of the scams and rugs as well. And then for the second problem you were mentioning about the how to articulate, right, the ideas, I feel like this is, I think, with my personal opinion, I think your product is pretty complex, so for sure, like many people, and I mean, I've been in Web3 for a pretty long time, so I do have a better understanding than most people. I'm trying to make my podcast more accessible for people as well too. So then, trying to simplify a lot of the ideas on there. But yeah, this is a tougher one. I feel like, yeah, a lot of even the marketing we's have challenge like
Yeah, and I never. It's funny I mean, this is more like a personal thing, but like in my personal life, I never understood up until I really got into RAAC, and I would try to explain these concepts to like the people around me, and it'd go over their head, and I never quite got it. And then now it's like I explain it to uh, people like yourself who are very experienced in Web3 and know DeFi, right? And then even when you're going through it, it's like, okay, like wait, okay, now I got it. And it takes a little second, or you really have to listen in. So I do understand now the complexities, and I've gotten a lot better at breaking it down. But for sure, that's definitely a major pain point of ours.
Yeah, I think there was a book that I read. I think it's like the mom test or something. You can explain to your mom or your grandma who's like not in crypto to understand this. I think that's a huge achievement, to be honest. Like explaining to someone like me probably easier than explaining to, someone like your mom or grandma who's not in crypto. Yeah.
Yeah, no, and that's where you remove a lot of the complexity, and like if you are explaining to grandma or mom, you remove the rack token, you remove the gauges, and you simply bring it down to 2 clicks. You own real estate.
Yeah.
You're able to take a loan against it. 247 365. You're never dealing with a loan officer. There's no one ever telling us, hey, you can't. The system automatically registers, oh, you own the NFT, it's worth this much, you're allowed to take this much. That's really what's happening here at the end of the day.
Cool. Yeah, for sure. I think we still need a lot of work on that on our end to simplify things for other people to understand. Cool. Just a few more questions before we close out the show. I think one is how do you think like the Web3 RWA space will evolve in the future?
Yeah, I think it's gonna keep gaining traction like it has. I think the RWA space has gained billions in the last month. I don't have the exact figure off the top of my head, but it is gaining traction insanely fast. You have a lot of institutional demand all around, not just on the RAAC side. Stablecoins, and this is from Sam K of Frax Finance. Stablecoins are the third $1 trillion market after Bitcoin and ETH, and we're seeing this happen in front of our eyes. Yeah, the blockchain tech can add a lot of utility and a lot of liquidity to these what would traditionally be considered liquid assets as well. So you'll start to see blockchain swallowing all the real world assets like we talked about back in 2017.
Nice. Yeah, actually, I like the point you said about like stablecoin becoming the third trillion market, right? After ETH and BTC. Yeah, that'd be very interesting to watch.
Yeah, no, it's really the killer use case. And think about it, we're only really focusing on USD, right? There's so many other currencies out there, and you have forex markets. I think forex markets will eventually be all on chain. So yeah, I mean, there's a lot more value and a lot more currencies out there to kind of add to the space.
Yeah, for sure. I think agree. Right now, it's just mainly USD denominated. Most of the things you see in. I think recently I saw there's like a Euro C, EEURC, which is like a Euro stablecoin, right?
Correct.
And yeah, I guess that's probably because of regulations in Euro, also like MiCA and a couple other reasons why.
Regulation and also liquidity, right?
Yeah.
There's some demand, but the reason it's not prevalent is most liquidity and demand lies with USD. I think like Euro stablecoins are gaining more traction, but they need to deepen on-chain liquidity, I think, to grow further.
Yeah, for sure. Yeah. Need to a lot more. I think for any stablecoin for that matter, whether it's like Euro, USDC, or even your future.
Yes, relative to TradFi markets, we're just a drop in the bucket,
okay.
right?
Yeah.
Well, think about it. Real estate is globally a 330 $trillion market.
Yeah.
And DeFi itself is $96 billion last time I checked. Maybe things went up today, but there you go, right? So DeFi right now is really just a drop in the bucket to how much value there is in this world. So it's inevitable that we're going to be siphoning a lot more of that as time goes on.
Yeah, for sure. Cool. And do you have any advice for people who want to build their own Web3 company?
Yeah, I think the biggest thing is you're looking to start your own Web3 company, or you're just starting your own Web3 company. I would say, yeah, surround yourself with really good people. RAAC is only where it is because of the people who are part of the project and who have helped us get here. That's Chainlink, Llamas, Michael Agravo Curve, tons of other people. And I would say trust yourself, trust your product. If you've done the market research and you're getting good feedback, then keep building. I feel like no one knows the space better than DeFi natives. And if you go start asking TradFi folks or your friends and family, they're going to have no idea what you're talking about. That was a big thing for me, was articulating all these ideas before I jumped into the whole DeFi side of building RAAC, and no one understood it. So I would say if you have an idea and it's been professionally reviewed by your peers and it's sound, shoot for it and surround yourself with good people. And yeah, I feel like the rest will take care of itself if you have those things.
Yeah, it makes sense. Yeah, so I think a lot of homework and preparation, right? And you said need to be done. I mean, it seems like you guys have been building for a pretty long time as well. So you said that.
And yeah, and one more thing I'd like to add to that too is if you have a product that is not built on a narrative or hype, you can take your time to build these things within reason. Don't let the market force you to launch a product early. Nothing will ever be perfect, but do take your time because yeah, like I said, if you have a real revenue and business model, you'll be able to take your time to put the pieces in place.
Yeah, for sure. I think that's a very important point. Yeah, lately I've also had that discussion with some of the founders coming onto my podcast as well, like how to make sure to have a sustainable business model, right? As opposed to don't rely on hype or narrative or like short-term things such as like token launch or things like that. Yeah, where it may not be so much sustainable.
Exactly. We're so used to a 1 year, 2 year plan in crypto. Show me the 5 and 10 year plans, you know?
Yeah. The long term mindset need to be there. Yeah, but I feel like also need to be in the mindset of some of the investor and VCs as well, because I think now I feel like a lot of VCs are getting used to like shorter time frame for Web3 project as opposed to Web2 project, right? So, but I think we need like long term protocols, people who are here to stay, right? Build in the space.
Yeah, no, exactly. And I think that's exactly what RWAs provide. They provide a lot more ability to create sustainable business models that aren't cyclical or rely purely on the price of digital assets.
Yeah, certainly. Final question: where can people follow you or your company?
Yeah, so follow us on X at Regnum Aurum, REGNUMAURUM. And you can join our Discord from there. We have a Telegram game right now. Try to beat the high score, participate. There's a leaderboard. But yeah, the best place to stay updated is definitely X. Pretty active on there, and we'll be ramping things up and be starting our go-to-market strategy. So there'll be a lot of activity there.
Awesome. Yeah, I'll make sure to put your links in the show notes here so that people, both the listener and the viewers, can follow along and follow your company. Cool. Once again, Kevin, thank you for joining the show today and sharing with us your plan to disrupt the RWA space.
Yeah, no, thank you so much for having me on. Was such a blast, and thank you so much to the audience for listening to me babble for the last hour and a bit. So, awesome. Thank you so much.
Awesome. Thank you. And we're back to my studio. What do you guys think about the dApp that the RAAC team is building? Do you think it will be the future of RWA? There was a lot of technical terms in this episode, so if you have any questions, also feel free to leave them in the comments below. For the next episode, we'll be talking to Leo Vigna. He's the co-founder and CEO of VeraSwap. VeraSwap is a universal liquidity router that lets users swap tokens between networks with a simple UI without fragmenting liquidity. If you're interested in DeFi and DEX, then the next episode is a must listen. If you enjoyed this episode, please give a like and subscribe. It means a lot to me. Thank you for watching and see you next time.